month is about to begin. Rise up, it's time to log in. LP Army will teach you the way to be LP warrior starting today. We live for the fees we make. Soon it is profits that you will take. The LP Army marches strong. The best in Solana, we sing our song. We live for the fees we make. Soon it is profits that you will take. The LP Army marches strong. The best in Solana, we sing our song. We are LP Army, rise to the sky. Dynamic fees, our battle cry. LP warriors will never die. Thereupon we will fly. Rise, new soldiers, rise. Rise, new soldiers, rise. Spot, copy, ask, use them all. Winning's the task, we heed the call. Bootcamp, join our ranks so tight. Listen to the goose gang and gain your might. We will print and we will earn. What you gain is tokens burn. Join the ranks of the brave and bold. Story of the LP Army told. We are LP Army, rise to the sky. Dynamic feast, our battle cry. LP warriors will never die. Thereupon we will fly. Rise, new soldiers, rise. Rise. Take the course and earn your role. March with us and earn some soul. Dodge the rug and join the fight. We gain together LP Army might. Make your position and join the pool. Post your wins with Alex's tool. LP Army, we fight to win. Your journey is about to begin. We are LP Army, rise to the sky. Dynamic fees, our battle cry. LP warriors will never die. Thereupon we will fly. Rise, new soldiers, rise. Take the course and earn your role. March with us and earn some soul. Dodge the rut and join the fight. We gain together LP Army might. Oh.
G-Met, G-Honk, G-Dead. Welcome everybody to the LP Army Boot Camp number 11. Photon takeover right there on the comments. Welcome everybody. I'm so glad you're here. I'm happy to see you all here. So many people. This is gonna be hopefully the biggest boot camp ever. So let's get cracking into this right away. And let me just pull up on a different screen. Here we go. Let's go. So here's the alpha, guys. Our goal here is to help you up your LP game. We'll be starting, pretty close to the very beginning. This course is for everybody, from the beginner to the more experienced. So today we're going to go over the basics first. If you're here, we're assuming that you already have some small grasp of the words of market maker and DeFi, things like that. So you should already know what it means to trade crypto on the market and how. So we make that assumption. Probably pretty safe. We showing our little disclaimer here. I mean, the TLDR here is NFA DYOUR. If you're not cool then with all these things, then thanks for playing. Don't continue. blah, blah, blah. So prerequisites, you start small. It doesn't require a whole lot to get started. Be prepared to lose. You are encouraged to lose because that's how you learn. Consider your losses to be tuition, if you will. Um, you know, Failure is one of the life's greatest teachers. And as a weightlifter, I would tell you, we love failure. That's how you gain. But and if you're new to this, if you win, don't go all in just yet. Maybe you got lucky. Wait until you've lost and you've learned from it. So that can be your path to success. But it feels bad to lose, but it's how you gain in the end. When you're consistently winning, then you can progressively increase your investment sizes. You do need to have a wallet with about a soul in it. It's okay if you don't. The idea is that you'll follow along with some of the demos that we do. It's not absolutely required, but we'll tell you if we'd like for you to follow along, but that's on you. And the introduction, I am Heavy Metal Cook. I have a day job as a manager over an IT operations team for a major retailer. I'm a busy dude, busier than a cat covering poop on a marble floor. I volunteer in a lot of things, including Meteora and some youth organizations and other things. Mined ETH, LP'd on ETH. Man, that was brutal. I don't do that anymore. And I actually did on Avalanche Chain Trader Joe, which the DLMM is based off of, before I came over to Sol. So that's me, the Bootcamp mod. We have a great team here today. Some of our other instructors that are here with us today, Chief and Photon Magic, and Alex is with us. They're here to help answer questions and guide us along our way. So moving on. So we ask for you to use the chat feature to ask your questions, and instructors will answer them. They'll pop up anything that they think I need to answer live, but keep your questions to the point and concise. Let's see, we want, like I said before, we want you to complete the exercises and follow along, but it's not absolutely required. We'll get to the graduation task in day 2, which is required. More info to come on that. We welcome your feedback. We can't be perfect. We can't incorporate everything there ever is to know, but we welcome your suggestions. I love feedback, whether it's good or bad. So there's that. And here are some resources. This is not today's form to fill out. This is just some additional resources. I did just update this to version 2 to include some additional information. So take a moment, scan that QR code, and save that link, that information there. Included some more stuff. So anyway, we'll also post this on the Discord, pin it to the Bootcamp channel. But there it is. And we'll also share this specific QR code again later. Again, this is just additional resources, extra reading, expanding on some of the concepts that we will talk about today. So let's see, just check the chat here. And yeah, so folks are already asking, where's the form to fill in to get LP Army? you'll get that soon. Let's see, someone asked for the link. So let me just pull that up real quick. This is the only link that I'm going to share in the chat. There should be QR code things that you can put on your computer to share. I'll post the link here. I don't know how much good it's going to do you there in the chat, but that's it. And also, you know, of course, this is recorded. It's recorded to the Meteora X, the Meteora YouTube. It's going to my X, and I think, Chief, is that yours that it's also going to?
Yep.
Cool.
Mine.
So if you follow Chief, there's that. This is my X right here. So we're going to move on to the next thing. So by the end of today, you should know these things. We'll cover the areas and functions available on Meteora, as well as a few basic third-party tools. We'll give a tour of the platform and explain as many of these functions and features as possible. There will be some demo that you participate on. But we're going to talk about vaults and farms and dynamic pools, the DLMM, and all of these things. Again, basics. We're not going hardcore degen today. So this is the agenda. We're going to do some definitions and key terms. We'll talk about the point systems, some hands-on, and we'll leave some time in the end for Q&A, hopefully. So there's that. Okay. Photon, you can kill that banner. Okay. So what is liquidity? A liquid asset is typically used to refer. I'm not going to read the slide. This is a recap of what liquidity is. So most of you who are here, you should already know what that is. Market makers are those who provide liquidity and depth. In crypto, market makers on centralized exchanges such as Coinbase, Kraken, and so forth, they typically work on electronic market systems with bid-ask order books. They make money on the bid-ask spread, and that spread is very small, so they make money on very high volume. They do it with high-frequency trading. They usually, you know, to do that, it's huge amounts of cash and assets that they buy and sell worth of billions. So it's hard to be a centralized exchange. But you don't have to do that. We can do all this in DeFi. So AMMs and DeFi allows anybody to be a market maker on the blockchain. It's the protocol or the platform where the market making is taking place. So liquidity provider, or LP, refers to the person or firm that is providing liquidity through the AMM, or automated market maker. When they swap through that, they pay fees to the liquidity providers. That's us. This is all managed automatically by smart contracts on the blockchain, and it's not custodial. Liquidity providers and AMMs profit from earning fees on the liquidity they provide in the pools. I think that's obvious. There's many out there on the different blockchains, Ethereum and others, like EVMs. They use Uniswap, SushiSwap, PancakeSwap, Trader Joe. Of course, Solana, we've got Meteora, Orca, Radium, Saber, all these things. LP can also stand for liquidity pool. You may see the term LPing, which means to provide liquidity. So it becomes obvious over time. And the definition of a CLMM, concentrated liquidity market maker. The traditional AMMs are capital inefficient because only a small amount of capital from the entire pool is used. it helps you earn more fees by putting it in that specific price range. And it also helps traders because it reduces the price impact of their trades in liquidity pools. Uniswap v3 on Ethereum was the first to introduce that concept. Radium and Orca, they operate CLMMs. And here's some graphical examples of that. The AMM there on the left, it's liquidity is spread out over the entire range, putting only a small amount within the current price range, leaving the rest to be idle. It does have the advantage of not requiring any maintenance by you, the liquidity provider, but you can earn less fees per dollar that way. The CLMM style pool, it allows you to put more or all of your tokens at the current trading price and none or much less on the fringes. So this allows you to earn more in fees. It does have the disadvantage of missing out on any fees when the price swings higher or lower than your specified range. And you're more likely to experience what's called impermanent or divergent loss when all of your tokens have been swapped for the other and you're out of range. When you withdraw out of range, those losses become permanent. So, a few points. LPing is not staking. You're not staking anything. Don't be surprised when you deposit into a pool and tokens get swapped for the other. That is the nature of it. In one sense, you're trading, but you're really not. You're just willing to swap back and forth from one token to another, and you may even hope to sell all of one of the token or the other, or you're not. LPing can be like, say, owning produce business. Produce can go bad. So, and the demand, just like demand for volume for tokens, it can go bad very quickly. So sometimes meme coins are kind of like produce. You don't want to be holding them whenever they go bad. So you want to move that quickly, right? Of course, blue chip assets and things, they're long term. You may want to hold that, but those are lower volume, but it's more consistent, more resistant to dumping. Okay. So now we're going to talk about vaults, dynamic pools, and farms. Meteora's dynamic vaults is DeFi's first dynamic yield infrastructure, where the vaults rebalance every minute across lending platforms to the best possible yield while prioritizing keeping user funds as accessible as possible. So now we're going to demo that here. We want this one. Okay, here we go. Going to take it to the vaults. So here are the vaults, and you can see it's using these other protocols, Save, Camino, MarginFi. I don't recommend that you deposit here, but these are the tokens within the vaults. You can deposit and earn these APIs, so you may be able to earn a better one somewhere else. But it's really quite simple making a deposit. You put in however much you got, you make the deposit, and you can withdraw. There's chart information here. But there's a reason why I don't recommend using the vaults. One, you can earn better yield in a different way with Meteora. And this, if you're looking to earn points, this won't earn you any points. Your money's pretty safe in here, but you're not going to earn any MET points. So now we're going to talk about where am I? Am I here? We're going to talk about dynamic pools. So I'm going to go here to the pools page and dynamic pools. So here we'll see a list of the dynamic pools. The ones with the little Meteora logo, they were created by Meteora. But dynamic pools are, for the most part, permissionless. So anybody can make one. This is like a traditional AMM. There are some important differences. And I'll show you one here. Let's see. It's one that I like here. VSOL. Okay, so Sol VSOL. You'll see here in the column that there are some labels showing the type. You know, it's liquid staking token. This is a dynamic one. It's stable. This one here, it's VSOL Sol, and it's not labeled as volatile. And there's a reason for that. You will find this one under LST pools, and you'll notice LST pools are all created by Meteora. This is not permissionless. You can't create one of these, but the team can create one for you. But anyway, we go in here. We'll see the total value locked. We'll see a percentage of the amount total permanently locked. And unless you are a token creator or involved with the project, I don't recommend that you lock your liquidity forever, because forever means forever. Here we see our 365-day yield, the base APY, and if there are liquidity mining rewards, it'll have something here. Not all of them do. Dynamic pools are not 50-50. There's a percentage on each one of these that show the ratio of the tokens that are in there. And of course, the current pool price. The virtual price, this virtual price is a little bit more complicated and time consuming to explain, but it is in the Bootcamp resources. A link to the official Meteora docs if you want to go and read that. Of course, we show our 24-hour volume. That's how much trading has come through this pool in the last 24 hours, and it's a moving 24 hours. Now, here's where it's important, and we talked about the vaults a minute ago. 24-hour yield. So what we're getting here is this is the yield earned on this pool from the vaults. So the SOL that's in here also gets lent out in the vaults. So you're earning a yield off of those vaults simply by depositing into this pool. And then, of course, that 24-hour fee, that's the fees earned off of trades that have come through this pool in the last 24 hours. So this is one of the things that I like about the dynamic pools on Meteora is, yes, it's an AMM. Your liquidity is not so much concentrated, quite as much, but you're earning both yield and fees. And then, of course, the liquidity provider fee. This is the amount charged on any swaps that come through this pool, not charged to you, charged to the swapper. So that's what you're earning. Protocol fee on these types of pools, it's 0. That's what Meteora takes. These types, they're getting nothing. AMP is another one that is long and complicated to explain, but it is in the Meteora docs and Bootcamp resources, a link to that. And just like all pools, we have charting tools that you can click on. You want to see the chart for this particular one. And the supported trading platforms, we're not going to cover any of those in this course. But depositing into the vaults, not the vaults, dynamic pools, while you can make an unbalanced deposit, it is not recommended. I would not do it. where I use, it will automatically swap your tokens for you. You could potentially lose a little bit that way. The best thing to do is actually do a swap. Now, while you can swap here, this swaps directly within this pool itself. It's not swapping on Jupiter. You may get better price on Jupiter. And right here in the lower left-hand corner, you have this handy swap function. And I will just demo this here. I'm just going to put in swap for 0.3 Sol for VSOL. And approve. And you can follow along with this if you want. You don't have to. But here we go. I've got some money here. I'm going to hit max on my VSOL. It automatically selects the correct ratio of SOL for me. And now I'm going to make that deposit. Okay, so now it's deposited. I'll see here the amount that I have in here. Now, one thing that Dynamic Pools doesn't show you is it doesn't show you how many fees that you have earned off of your liquidity. Those fees are automatically compounded back into your pool. The way that you know how much you're earning or whether you're up or down is you need to make a note yourself how much you deposited, and then later you can see how much you can withdraw, see the values. So know what you put in and then look at what you can take out. That's the only way currently that it is done. So now I'm going to show you the farm for this. Again, not all dynamic pools have a farm, but I'm going to click that link there and it takes me directly to the farm for this. This is just to earn liquidity mining rewards. And here's how you know whether or not a farm is giving out any is right here at the top. If it says weekly rewards and it's giving a number, then that farm currently has rewards being given out. Those rewards are provided by the project itself, not Meteora. So if there's nothing there, then that project is currently not providing anything at this time. So anyway, to start earning that, you actually have to deposit into the farm. You're still earning points and fees on the pool. You're fine. But we make our deposit into the farm. And there we are. We've got deposit in here and we're earning this particular one is VPT. You can claim that at any time. Withdrawing from here does not claim your tokens. You can leave them here. You can pull them out. It's whatever you want to do. But there they are. Now, you won't be able to withdraw while you have them in the farm. So when you're ready to withdraw, you have to unstake it from the farm. We're going to pull all of it out. Someone asked, do dynamic pools earn you MET points? Yes, I did say that already. Yes. So, all right. So now we've withdrawn from the farm and I can withdraw from the pool. Balance withdrawal, again, that's recommended, but whatever. If you don't want to do it, that's fine. You can withdraw just whatever you want, I think. Oh, that's weird. We're going to do a balance withdrawal. Give me all of it. You can, of course, define smaller amounts than that. But I'm going to withdraw. So to make a deposit with both tokens, right? Yes, you do. If you don't, it's going to do it for you. It's going to swap one token for the other to get the ratio correct. So if I deposited just SOL, like if I put in one SOL, the pool will automatically swap me for this ratio. The team doesn't recommend that you do that. So I like to make those balanced deposits. Okay, so now let me switch just a second, double check where I'm at on this. What I need to do. Low volume metal music. Man, I thought about that, but that would figured it would be too distracting. Do farms earn you points? No. Farms do not earn you points. Only the liquidity within the dynamic pools themselves. Okay, I think I covered all of that I wanted there. Who can make a farm? That's a good question. The only ones who can make a farm is the team itself. So if you wanting a farm, you need to put in a ticket, and the team will take care of that. But now we got to talk about impermanent, aka divergent loss. So this can be a very complicated topic to explain, and we're going to touch on it in the Bootcamp resources. There's some links that'll explain it more. But basically, when you provide liquidity, traders are swapping both of your assets back and forth. When that happens, the price changes the allocation of your assets within the pool. And this means you will have more one asset and less of the other. Frequently, you hear this called impermanent loss. It's more accurately called divergent loss, but that happens when the relative price between your deposited assets in a liquidity pool changes compared to when first deposited. That's the nature of LP, and it's guaranteed to happen. Another way to put it is you lost more than if you had just simply held, or that you gained less than you could have just by holding. The bigger the change, the more you experience that divergent loss, but that doesn't necessarily mean your LP position has lost value. Assets that remain relatively stable with small price fluctuations are less subject to that divergent loss, such as USDC, USDT, which are typically, they stay in a tight price range and they're kind of pegged to each other. Stablecoin pools are significantly less risky when it comes to this divergent loss. The goal of successful LPing is to generate sufficient fees to overcome these losses. If you're able to close your position and end up with more of both tokens than you started with, then you've achieved the goal and you win. This little chart here is a common one you'll see. Like if you Google for impermanent loss, you'll see this chart, and you'll see some math with Greek letters that's more complex than we're going to get into here. Again, go to the Bootcamp resources to do that. We will talk about impermanent loss more later, but it's guaranteed to happen. The goal is to collect more fees to overcome those losses. That's how you profit. So here's a small example. This position here started with almost 40 USDC and about 0.25 SOL. And then after a little bit of time, you can see how it ended up.
Cook,
yeah.
Can you hear me?
Yep.
I think you're not. You didn't share the screen for the presentation. We just see you at the moment.
Oh, cool. Let's correct that. So let me go back. Sorry about that.
There we go. It's working now.
Yeah, so that's awesome. I love it whenever I make mistakes. So here's what I was talking about for the impermanent loss. This groovy chart. You get these curves. Greek math is involved, and it's good times. So anyway, again, go to the resources. You want to learn more about this. All right, so there we go. We've got a deposit here of almost 40 USDC and 0.5 SOL. After some time of trading, this is how it ended up. 0.488 or 40, almost 49, whatever. Ended at a price of 171 with about 0.19 SOL and 49 USDC. So this position lost this much SOL, 0.05 SOL, and it gained about $9.50 USDC. So the net change in total value, including fees, was about 48 cents. So in this case, the divergent loss was a gain in USDC. A very profitable one, but it's a good example. So moving on, more definitions for you. You can see here it's explained. You can read TVL, the total value locked, and volume and volatility. Volume and volatility, those are two key terms not to mix up. The amount of trading over a period of time, or the amount in USD value, that's how it's often displayed. And volatility is how much the price is changing over time, going up and down. See, Gosha is here. Hey, Gosha. Okay. So some more. When you click a button to perform a swap through any AMM, by the time you click that button and your request is received by the blockchain validator and processed, the price may be different than it was whenever you click the button. That is known as slippage. And when you swap through an AMM, you are causing the mix of the assets in the pool to shift and the price of the asset to change. If the amount of liquidity in the pool is very high relative to that swap, then your swap's going to have little price impact. If you swap through a small pool that does not have a lot of liquidity relative to your swap will have high in price impact and cause the price to change a lot more. Market cap, sometimes called MC or MCAP, is calculated simply by the total number of tokens by the current price. And this is something that you're going to see on individual marketplaces. You'll see the 24-hour fee over TVL or divided by TVL. This is the yield for the pool by calculating the fees generated in the past 24 hours divided by the total value locked. It's one factor you can use to determine whether or not you may be interested in providing liquidity in that pool. However, take this with a grain of salt. The TVL in pool is constantly changing as liquidity providers enter and exit the pool. So the denominator in this metric is changing all the time, while the value of the fees in the past 24 hours doesn't. So that means it could be over or understated if whales have made big moves in the last 24 hours, or just a lot of people. But when a whale's in the pool, they'll generate a lot of fees. If you see the TVL after they've exited the pool, then that TVL will be overstated. And if you enter expecting that rate, you're probably going to be disappointed. When it's understated, if whales just enter the pool, the TVL will be higher than it was before they entered. So the fees generated in the past 24 hours were done with less TVL. So now it looks like the pool is yielding less because of that higher total value. So again, it could make it look really small when it's actually doing better. I personally don't pay too much attention to these values. It's just like, yeah, okay, that looks neat, but you got to look at it and say why. Why does it look this way? I care more about the fees generated in the past 24 hours and what the actual volume looks like. Okay, so portfolio. I'm actually going to show this more in depth later, but it's not going to show you any deposits into vaults. I wouldn't do it. This is the only place you're going to find your positions. It's not going to show on the main page. It used to, but it doesn't anymore. But alpha vaults that you've deposited into, including ones that you've done in the past, it's shown at the bottom. It's all there. Portfolio is mostly self-explanatory. But now we're going to LP. We're going to do a little bit of demo here. So we are going to change screens here. All right, cool. Go here in my portfolio. I've got nothing, but that's okay. We're going to go into a dynamic pool here. So I'm going to go to pools at the top. I'm going to choose dynamic pools. I am going to, even though it's right there, you can use that search feature. Defined. I'm going to go right in here to the USDC USDT pool. Now, we need some USDC USDT. So I'm going to come in here and do a swap. And this is one of the things I love about the integrated Jupyter swap function is it's going to automatically pick the two tokens for whatever pool you're in at the particular time. But of course, you can change this to whatever token you want. And I'm going to choose here. Let's see, what's the ratio? Ratio is 18.5 USDC to 81% USDT. So I'm going to put in here, I'm going to pick 0.3 SOL. So I'm going to do a little swap for some USDT. Okay, so now I have some USDT. And I'm actually going to show you what I was talking about, making an unbalanced deposit. And for this particular pool, I don't feel too bad about doing it because these two are basically pegged to each other. So I'm really not going to lose that much. But again, it's going to give you this warning. It's going to show you what's happening. I'm putting in $56.19 of USDT. I'll make this deposit. Okay, so you can see I lost 2 cents off of doing that trade or depositing that way. But I have, you will see here, if I go to withdraw, you will see right here it did the swap for me. It turned some of my USDT into USDC so that it balanced the thing. And I will give you guys pro tip right now. If you are wanting to LP USDC USDT, this is the best place to do it. Now you may think, heavy metal, that sounds crazy. The DLMM is concentrated liquidity. It's going to earn you better yield. Well, guess what? In this particular dynamic pool, it is concentrated. Where exactly that concentration is, I don't know, but Ben told me directly that this stable pool, and I imagine most stable pools, are concentrated. Here's the other bonus. Remember how we talked about those vaults? Yield. I'm actually getting more yield out of this particular pool than I am 24-hour fee. Both of these tokens are in the vault, so I'm getting yield from the vaults from both tokens plus fees. Now, is this pool going to make you rich? No, it is not. I look at it from the perspective of, if I put my money in the bank, what would be my returns from the bank? And I can tell you, it ain't much. You know, I put money in a savings account in the bank, and at the end of the year, I get 2 cents back. Here, you'll earn dollars, several, depending on how much you put in. But to me, this is how I look at it. It's like a savings account. So anyway, this is a great place to put it. Let's see if I missed anything. Photon, is there anything I need to answer? Oh, sorry. There's Gosha. Sorry about that, brother. And okay. Okay. All right. So now I'm going to actually withdraw or actually I'm going to leave this in here. I'm going to go here to my portfolio, and I can see right here, this is my deposit. That's what I'm getting. There's the yield, 24-hour volume, the TVL, all that neat stuff. Cool, cool, cool. What is the base APY? Okay. So here, the base APY is variable APY based on trading activity and yield. So daily, this one's getting currently 7.8, weekly 9.5. This is an estimation over the 365 days. I would probably go with this one for more accurate information. I would go off of that one. So again, this stuff is in the docs. I don't want to get too deep into this. If you want to read more about that, it is in the Meteora docs. So yeah. Okay. Going back portfolio. I've lost my place here. And I don't think I have. Okay. Okay. All right. So now we get to talk about the DLMM. The definition, that is pretty self-explanatory right there on the screen, but it's similar to other concentrated liquidity market makers, but it's got additional features and enhancements. So what these are, it gives you, the liquidity provider, an advantage to be more profitable over other CLM type products. Liquidity is placed in bins, which we're going to discuss next. We'll also cover these other features as we go. What's a bin? Well, in the most simplest terms, it's a container that holds liquidity. It can hold an infinite amount of any one or two tokens, or none at all. Only one bin can be active at any time, and only the active bin can have both assets in it. They're set at specific price ranges or specific price points, and they can't change. And the range of price that a bin covers is its width. Excuse me. And the difference between these price points is known as the bin step. Swaps that occur within a single bin do not suffer from slippage. So we can see here, token Y, token X, the active bin, it's the only one that has some of both. Another live example here, you could see in teal, WBTC, and then CBBTC here at this specific price point. And you can see this is a small bin step, is covering very small changes in price. Bin steps is what defines the width of the bins. In other words, the difference in price between one bin and the next, and it's defined by basis points. In our example here of 50 bin step, we calculate by multiplying the price by 1.0050. If we're 200 bin step, we would use 1.02. One bin step is 1.0001. So we can see right here, the price of SOL per IO in this bin is 0.01231. And so we multiply that by 1.0050, and we get the next bin price of 0.01237. So, yeah, that covers all of it there. Okay. Oh my gosh. Click. Okay. So pools can have any of the following bin steps, but are limited to specific base fees. So like a 0.01 base fee pool, it's only going to have these bin steps available to it. So from very small to 100, which is somewhere in the middle. 2% is limited to these bin steps. 1% is limited to these. And 5% is limited to these. There's many more. This is just a handful of examples, but a smaller base fee means using smaller bin steps. You can, more liquidity is concentrated in a smaller price range. A larger base fee, that means bigger bin steps, and liquidity can be spread out to cover a larger price range. And there's reasons for using any of them. All right, so all these cool images here, content I borrowed from Chief, who's going to be your instructor tomorrow. So here, a lower bin step means these price points are closer together. That allows for more frequent trades because the price can move smoothly and continuously through these bins. So let's see. So that's next one. Here we go. More frequent trades mean more opportunities to earn fees. So each trade generates a small fee. So the more you get, the more you can capture, the more you can collect. They provide a smoother experience for the trader because they face smaller price changes between the trades, making it more predictable and attractive. That's probably why low bin step pools get favored by Jupiter. The DLMM, it's also got dynamic fees, and we're going to go into that even more here in a bit, but it's similar to like surge pricing. When the volume is high and demand is high, fees get higher up to a maximum of 10%. It's triggered when the price is dynamic or it's based off of volatility. So the more bins it moves across to get from price A to B, the higher the dynamic fee. That can be helpful on a low bin step, but it also happens in the big ones. Now, a large bin step will offer you convenience and is typically used for more volatile tokens. You can still cover the same range with the same capital in a small bin step pool. It'll just be split up across multiple positions and divided into smaller bins. This large bin step pool will split $200 worth of assets into 2 bins from price 169 to 169.25. The low bin step will split the same $200 worth of assets into 8 bins that cover the same range from 169 to 169.25. Same amount of capital. One could perform better, but again, there are reasons for using the large bin step. It may, again, you can go wider with it, or if like you're looking to chill more or sleep on it, there may be a reason to do that. Someone, I just saw this question right here. It's moving. Not that question. Someone asked, will we be giving you the slides? No. We do not give the deck, but in the Bootcamp resources that we made available to you earlier and we'll make available again, I did include some information on bin steps, more in-depth explanation, and a lot of these images, whatever. So go check that out. If bin steps are not clear, that's one of the things that people get hung up on the most. So moving on. One of the main advantages the DLMM has over CLMMs is the ability to shape your liquidity with strategies. You can use one strategy or even combine them to shape your liquidity to suit you and your goals for any particular pair. So like here, spot. This is basically like using a CLMM because it's just straight flat. That's how a CLMM works. Curve, concentrated approach. And really, this is you really only want to do this with a pair that the price is staying generally in the same kind of place. So like stables or maybe even LSTs. I would not use the curve on a meme coin that you're going to get wrecked so hard. It's not for that. This is probably one of the least used strategies. And there's a popular, the bid ask. This is great for DCing in or out of a position or just capturing wild swings. So whenever you do this, less of your liquidity is here in the middle. And it's like, if you're familiar with the term buy low, sell high, right? So as the price is going to go down, you're going to buy more of the token at lower prices. And where it sells, you're going to sell more of the token at higher prices. So this helps you maximize your profit or hedge against IL. DCA, that stands for dollar cost averaging, in case you didn't know. So now we talk about stacking it. This is one of the things I love about it. It's a couple basic examples how you can stack them together. Employing spot and curve means to focus your liquidity in the trade range where you think most of the price action is going to happen, but also leaving some on the outside to capture during price swings. Some people will do this on USDC per sol. I'm not a fan of doing it that way, but this is an example. Some people will go straight spot. Some people will do the bid ask on that. Here's an example of spot and bid ask. And I actually started out on this one with just SOL on one side. And as it earned fees in OR, I deposited them into a bid ask above. And so that way, as the price goes up, I'm going to sell more of that OR at higher prices, giving me even more profit. So you could see here, there was a base of spot, and then I put it in bid ask there. Okay. So here are your goals. Tail ping, you got to have one or both. You need to aim to sell what you bought at a profit once it has diverged in your favor from your entry. However, unlike regular trading, you're going to earn fees. So there's two ways to earn profit: achieving a positive return from a divergent loss or a positive return from fees. And sometimes you can earn crazy fees and sell what you bought at entry as a loss and still get a profit. That happens less often than I'd like, but it's possible. You can do it. But other times the position will move out of range in the positive. And now you've sold what you bought at a profit and earned fees. And I heard someone say yesterday, impermanent profit. And I've never heard anyone ever use that term before, and I love it because actually
I have a lot of that.
Yeah, impermanent profit. And permanent profit is you're in this, the price of that token is pumped way up, and you didn't withdraw, and then it drops back down, and now you're wrecked. So make sure you make your impermanent profit permanent.
Very important, yes.
Yes. So anyway, we're going to move on here. Positive return from fees. So again, your fees earned solely rely on the amount of volume it's done. These are the most important parameters to choose: volume, liquidity, volatility. But then positive divergence loss or impermanent profit. I love that one. So it's basically the token pumped, right? This particular pool, NOS and SOL, it had some SOL, some NOS got deposited, fees to price of NOS pumped, and now I'm in pure profit. So ideally, this is what almost every trader wants, is this to happen. I mean, if it's two tokens that you don't mind holding one or the other, that's fine. If it's like a project token that I believe in, that's me. And I don't care which token I have, as long as I've earned some fees off of it. But there we go. We've pumped. We're making profit off of that way plus fees. Okay. All right. So now it's time for the DLMM tour, and I'm going to pause for a second. We've got an hour left. Is there any questions that we need to answer on screen, Photon, or anybody? Am I missing something so far?
Looks like a few people confused about bin steps. What's the difference between 50, 100, and 200?
Okay. So, well, 50 is kind of one of the smaller ones. 100, 200, 200 is where you're starting to get a large area. 400 is the limit. I'm not sure what. Let me go back to bit steps. So high bin step, let's say that this right here is 200. I don't know what it is, but this may be your bigger bin step and this may be your lower bin step.
Yeah, I think the important thing is that both bin steps cover the same price range from 169 to 170.
Yeah.
The high bin step will do it in fewer bins, and the low bin step will do it in more bins.
Right.
So you can kind of achieve the same range from 169 to 70 with different bin step settings. And yeah, usually the lower one will earn you more, but it's more difficult to manage.
Right. So, and because each position is limited to 69 bins, if you can imagine here, 69 of a high bin step is going to cover a much wider range than 69 bins of 50 bin step, right? Because like here, this is only 8 of the high bin step, and this lower bin step is a whole lot more than that, right? So we're going to cover a smaller price range with the low bin step, and the big bin step is going to cover a wider price range. You know, when you are, especially whenever you're first starting out, you know, if it's a meme or something that may swing wild, you may feel more comfortable in a larger bin step because of those price tradings. A lot of people who do small bin step with crazy volatile memes, you know, that takes guts. And, you know, while you can earn fat profit off of that, you can also earn fat wreckage. So that's where you be careful there. Okay. So let's get a tour of the DLMM. Good. I love all these instructors, man. You guys are great. Present share. Portfolio time. So now it's time to check out the DLMM. I am actually going to go with. So anyway, tour here, the DLMM. Come here. You can check this box to show you suggest pools on based off of tokens you hold. Or you can search for any token that you'd like, and it'll show you some pools for it. I'm going to go here. You can see here the total TVL for all the pools for this pair and how much volume is rolled through, and an estimated 20-hour or the 24-hour fee over TVL. Now, Meteora is going to show you the top 3 that they are recommending, and that's based off of the TVL and the volume and everything that's rolled through in the last 24 hours. But, you know, if you want to, you can hit show all. And it'll show you everything. And you can see these are the top 3 that it was recommending, and then the others. And you'll see a whole bunch of empty pools. And the reason for that is because anybody can make one. Whether you know what you're doing or not, you can create a pool. I strongly recommend that you know what you're doing before you create a pool. Have some experience. Stick with stuff that's well established before you start going and doing that. So here, actually, I don't want that one. I want... We're going to go into this one, USDC, USDT. So here, bin step 1, and you'll notice this is different. People have swapped this particular one. On here, it doesn't matter. On others, it does. But anyway, here's our tour, guys. Let me zoom in. We see our total value locked, the allocation of the 2 tokens at this particular time. This is a 1 bin step pool. Here's the base fee. That's how much you are earning off of any trades that come through. The max fee, it's 10%. Always. All pools, all the time. 10%. That's the max fee. Protocol fee. This is how much Meteora is taking off of each trade. The protocol fee is 5% of the dynamic fee. Okay. Dynamic fee, again, this can go up whenever there's a lot of volatility happening with the thing. So here, Meteora is taking 0.0005% off of this right here. If this went up to 0.02, which it won't on this pair, but if it did, this would go up. This is how many fees this particular pool has earned in the last 24 hours. And of course, here it's showing the current pool price. You can swap that. That's just for information. Showing your total liquidity and how much you've earned. And I love this right here. You hover right there and it'll show you, give you a breakdown of how much of each token you've earned. So let's do it. Let's deposit here. And I think what I'm actually going to do, I'm going to go in my portfolio and I'm going to withdraw from this pool. Get this stuff out of here, withdraw. Oh, and one thing that I didn't talk about here with the dynamic pool, so I'll just mention it now. When you deposit into a dynamic pool, you will get an LP token. It'll show up in your wallet, Meteora LP token. That's like your receipt. You don't want to lose that. You don't burn it. That's how you can withdraw. If you burn it, you just lock that liquidity in the pool forever, and there's nothing that anybody can do to get it back for you. Not me or nobody. So don't do that. Now, the DLMM does not use those. Does not use those at all. Here we go. Let's go into this one because it's got the most TVL. We're going to create a position. And if you use the autofill feature, it's going to automatically do essentially 50-50 based off of what you're doing with your range here. You can see here I chose to do shorten my USDC, so it increased the amount of USDT so that it's evenly balanced. And I'm using these little sliders at the bottom to do that. So we can do that. We can do the autofill, or we can uncheck and we can put however much we want of the 2 tokens. So you see like that. Another choice, of course, is to go one-sided. And whenever you choose one-sided, it's automatically going to try and fill the entire range with that. Like so. And you see it here, it won't even let me choose this. So I'm going to undo that. Go back. So I can choose however much I want here. Now, spot's fine, but I'm not going to use spot. You see down here in this lower section of the grade part, this is where all the other liquidity within this particular range is within the pool. So this is where everybody else has put their money. And if you hover, you'll see the bin price and how much of yours is in that particular bin, and how much is there total. So there's the current price, and then you see. So we can see people are concentrating their money here in this particular range. Now, just because this is where other people have put it doesn't necessarily mean that it's where you should put it, but it's also not a bad guide to use. Now, this is one bin step, so these are very small changes in price. And for this example, I'm going to go with this here, 11. You could go tighter, or you may even choose for this particular one to cover this range. Now, another option, of course, is that you can set this number, right? So you can just type, and it'll automatically adjust to this here. Or you can change the percentage. Let's say I want 0.05% on the positive, and it's going to set that there. You can't change this number manually. It's going to go based off of this information here. So go with that there. Go with that there. Do what I wanted. It blanked me. For now, I'm just going to use the sliders. Boop, 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 boop. Now, again, this pool, it stays pretty much within this range. So this is a good opportunity to use curve. So it's got this money in here like that. Now, obviously, it looks like this because I've got way more USDT than I do USDC. Now, I'm going to point this out right here. This is the point where a lot of people get hung up. So I really want you to pay attention to this right here. Sol needed to create one position. This is how much it costs to make this, to create this position here. 0.05. If this number is larger than that, it means you're creating bin arrays. When you click that, it's going to give you a full breakdown of what you're paying for. The position and the rent, it's this much. And it says right here that it's refundable. This is actually costs the rent on the Solana blockchain itself. Meteora is not taking or keeping this money. You are creating things on the blockchain itself. The reason why this particular rent is refundable is because when you close the position, it's destroyed on the blockchain, so you'll get that money back. Now, bin arrays. These are generating the different bins in a specific pool that is created on the blockchain itself. Bin arrays can't be destroyed. Pools can't be destroyed. So if you generate new bin arrays, that price is not refundable. Okay? So you need to pay attention to that. If you're depositing liquidity into a place where no one has ever deposited liquidity before, then you're going to generate bin arrays. I'm going to change my price here to $2. I didn't do it. Next price. Let's see, will it do it? Holy crap. That's a lot of bins. Okay. So here's a very extreme example, if you will. I set this to do $2 because to do this, and this would never go there, where that's going to create 6,932 bins, which is 101 positions. There's the cost there. Probably shouldn't have gone this extreme. Okay, whatever. I'm creating bin arrays right here, and the cost is 0.07 SOL per bin array. That's not refundable. So I guess my point here is pay attention before you deposit, because if you do something that's not refundable, you won't get it back. And there's nothing that we can do about it. So please read. Okay, curve. Just reset this back to reasonable. 12 bins. We hit add a liquidity. Okay. So there's our new position. We'll see our current balance, and it breaks down. This is obvious, but whenever it's SOL or some meme token that's showing you the current price or the value of what you've got deposited. So I like that. So here's our one position. As soon as it earns some fees, this number will go up. Fees in the DLMM are not automatically compounded. They're just kind of set separately until you claim them or you withdraw. What you do with them is what you choose to do. You actually can add liquidity to this position. If you had more of it, you just go there, and now here it's telling me I don't have enough. But if I did, I could add liquidity to it. And you can actually add positions. If you wanted to add a second position in a different range, you can do that. Just click add position, set your price points, and go. But we are going to actually I'm going to show you another really cool feature that I love, is one-sided withdrawals. Now, whenever you go to withdraw, you can withdraw whatever percentage you want, right? You can do 100%, you can do 1%, you can use these buttons to give me 50%, whatever, right? But you can also choose to withdraw just one of the assets. And if you click this show bins button, it's going to bring that down and show you what should we do. And we can actually slide and say, give me only this money right here. And you see it break down this much USDT. I'm going to withdraw it. Actually, you can also do this. Like if I only give me 50%, it's going to only shave the top 50% off, or whatever percentage you want it to be. So I can withdraw like so. And now I pulled just a little bit out, and you can see it went away here in my position. Now I can do whatever I want with that money. I can create a new one. I can redeposit it. I can deposit it using a different shape. If I wanted to do bid ask or spot, I can do whatever I want with it. That's what's really cool. But I'm going to show you the full withdrawal. Now, when you withdraw, if you just click withdraw liquidity, it's not going to claim your fees. It's not going to close your position. If you click withdraw and close your position, it's going to claim any fees that you had, withdraw all of your liquidity, and close the position, and you will get your 0.05 SOL back. Now here, we'll talk more about this later. To generate your P&L, Alex's super cool MetLex tool. We'll show that later. Right now, we're just continuing with the tour here. This is, again, just like on dynamic pools, a swap feature that swaps within this pool itself. Again, Jupiter's going to give you the best price. It may or may not go route through Meteora and route somewhere on the market. So there's that. What have I missed here on the DLMM? Oh, So your pull charts, if you like Bird Eye, Gecko Terminal, Dex Grinner, Dex Tools, you can use any one of these. It's going to take you directly to the chart for that specific pool. And share this tab here. So on Bird Eye, it takes me straight to the USDT, USDC pool. And it gives you an idea of where this token's been ranging, what it's been doing. And Chief is going to get more in depth into all of this tomorrow. See your trades, but that's what it is there. And you've got links to a couple of the community tools. This particular one right here, this is Metlex by Alex. And then, of course, we have Geek Lad's profit analysis, which I hear it's having some issues at the moment, but he's going to get it fixed. So anyway, those are your tools there built in. Of course, pull charts. We're not going to cover supported trading platforms within this course. Oh, here's something else that I love on DLMMs. Here's the trading volume. And this is based off of like a week. And so you could just see here, like January 5th, this much volume is rolled through the pool. And then this here. And I see a question popped up on the screen. Always get exceeded bin slippage tolerance at the moment. My bins are 55, so why is that? Well, so bin slippage tolerance. So we're going to cover this setting right now. Right here, this here, we have swap slippage, and that is for swapping right here. Then there's liquidity slippage, which is so whenever you go and you're making the deposit, the price of that token can change between the time you click go and it actually lands. So you can choose an amount that you're willing to accept. Okay. So here I've got this set custom 4%. This is how much I'm willing to accept in slippage for making a deposit. I can go low, like don't make it if it slips more than 1% or 0.01% or this much. But if you're having trouble, raise your liquidity slippage to a higher amount, and that will help those transactions land. So the number of bins is not really relevant. So did I cover that? Okay.
Yeah, I think you got it.
Okay. Someone asked what's recommended for slippage. I mean, I usually go with like 4 or 5%. Some degens may go higher. Chief, what do you use?
15.
Okay. Gosho, how about you?
Only for the liquidity slippage, not the swap. The swap will wreck you. You should
Right.
keep
Yeah. Don't do that.
tight.
Okay. Alex, he does 15.
Mine is 20, and I sometimes crank it up to 50 because I'm not really worried about it. But I need the really big slippage for meme coins. But for now, you can actually. I think it's not very dangerous, but I'm kind of I don't know how it can turn up later.
Yeah. So, yeah, and that's high liquidity slippage is not uncommon for guys like that, especially because, I mean, you see it if you're doing something that's very volatile and that price is swinging really hard, like it really is not going to be where it was whenever you clicked. So, but you just want to get in because you want to try and capture that. And so you just set it high and let's go,
Exactly, yeah. When it's that volatile and it's moving so much, just get in. Like that's the
Yeah.
Doesn't really matter whereabouts exactly you're going to enter.
Right.
But if it's something like USDC, USDT, there's no need whatsoever to do high liquidity slippage.
Right. Yeah, and it's not going to matter because even if you did set this at,
I wouldn't use it anyway.
I mean, you could set this at 50%. It wouldn't matter because it's it's still gonna do. It's still gonna put it in wherever it is whenever you click, right? So that one doesn't matter. Okay. Here we see again the 24-hour fee over TVL. This is the one that we talked about before, that it can be overstated or understated. In this particular one, it's not. That's probably pretty accurate. But yeah, there it is. Now, something that we also need to talk about is this here, global priority fee. So this is just like on Jupiter, whenever you're doing swaps, you may need to set a priority fee to be able to land transactions. If things are really, really busy, congested, you're having trouble, you can change your priority levels. In this here, you can use Gito bundles, or a mix of priority fee and Gito. You set your priority levels. You can set a max cap, which right down here, I've got 0.003 Sol. Or you can set an exact fee. I don't ever do that one. I just set a max cap and go. So the higher that you set these, the more transactions are going to cost you. And whenever the blockchain is not overtaxed, set it low and save yourself some money on fees. But if it's not, you're getting failed, boost this stuff up. Find the thing that works for you to help you land the transactions. But this is how you can do it right here. Other settings, we'll go here. You can change your preferred Explorer. The default is going to be SolScan, but if you've got one of these other ones that you like, Solana FM, Solana Beach, you can choose that. And of course, you can change your RPC endpoint. If you're having trouble, you can always change your RPC. A lot of times I like to use Helios, but any of these should work. But if you're ever having trouble with it working, change your RPC. And there's no save button here. You just click off of it and it's set. And I'll go ahead and talk about notifications now. This particular notification right here, you'll need to sign a message with your wallet. It's not going to cost you anything. And this is notifications. Let me get to the setup here. So you get notifications in app, just that little bell, put a red dot on it. You can enter your Telegram or your email, and you do hold, like, you enter your Telegram here, it's going to give you there's steps to verify. There's dialect, or you can have it sent by email. And all it's going to do is give you a notification that if you go out of range on a DLMM pool, it's just going to give you a message like, hey, this is out of range. It's not going to tell you whether it's up or down. Now, I'll tell you that some guys working on some upgrades to this that may give us some bonus features, but right now, this is all it does. So there. The other thing that you can do is, if you use some other tools like, say, Dex Tools or GMGN, whatever, you can set notifications to tell you whenever a token hits a specific price point. Chief may talk about that later. Tomorrow, we'll see. Okay, let me get back to our presentation. Share. All right. So we got our tour of the DLMM, and we actually did this already. We deposited into that pool. We talked about our notifications here already. And now it's time to do a volatile DLMM pool. So this is where we go have some fun, right? Okay. Sure. Already got my closed positions. So pools. Let's pick something here. I'm not going to go with anything insane. But let's go with, let's take a look at swarms, because this was not crazy right now. So here's the recommended pools showing me 20 bin step, 0.2%. I'm looking at, here's the TVL that's in there, and the last 24 hours, 34 million, only 1.2 million in there. This is the 24-hour fee over TVL. Again, this can be over or understated. So looking back over here, a wider bin step, 100.8. It's still got more volume than TVL, and you want that. That means it's turning over and it's making some money. The 80 and 0.8%, again, it's also doing that. Let's show all just to see. You can see the underperforming pools here. The 200 bin step, it's got $232,000 worth, but it's only pulled in $1,000 or $1,600 of volume in the last 24 hours. So this was not performing very well. And you can see there's a lot of people that made all kinds of combinations of pools, and these people wasted their money. Let's go into, that's the ultra high degen. Let's go with this one. Maybe we'll do a little bit of both, just for example. So, and I know folks are making suggestions here on tokens. I'm not going to do anything that's really wild today. This is for examples for newbies, so relax. We can see here the dynamic fee on this is actually up a little bit. Cool. I like that. That means we're making more. You see our protocol fee is also up because of that, but it's all right. Now the 24 hours, in the last 24 hours, it's only got 9,000. Maybe I don't like this one quite so much. So I'm going to go back. Let's look at the 20 bin step. It's got a lot more 24-hour fees. Of course, there's a lot more liquidity locked here. We're still getting some dynamic fee out of this. Let's look at the 80/80.
Look, you there?
I think he's lagging. I think something's wrong. Just a moment, people. Maybe a power problem. Sometimes it happens to me.
Yeah.
While we wait for him, just you can ask the questions which you have, so we have time to answer them here.
We could answer questions.
Okay, so we got one question. In DLMM pools, is there a way to see the volume for each pool based on shorter time frames than, say, 24 hours, say the last 1 hour? Yes, there is, and it's something I'll show tomorrow. But basically, Alex's tool, metlex.io, is very good for this. if you go into there, you can see if you search the contract address under the pools tab, you'll be able to see a table of all the different ones, all the different DLMMs for that token, and then how they're performing on 1 minute, 5 minutes, 1 hour, and 6 hours, and 24 hours. Okay, other question. Why the costs are higher to add liquidity when a pool only has a small number of funds in it?
That's because you need to create a bin array.
Yes, okay, so this,
we explained it.
Yeah, so when you start,
you can go on.
Yeah, so if you're in a very early into a new pool and no one has deposited tokens, Solana or the token, into that pool at that price range, you will have to pay to create the bin on the blockchain. And that's a non-refundable fee. So for every new bin that's created, the first person who makes it has to pay the fee to make it. Then after that, everyone else can deposit their token into it, and they can get, they only have to pay rent. They don't have to pay the cost to create the bin. So this is kind of why we recommend don't create new pools until you have the money to do so and you know what you're doing, because you quite easily lose a lot of money when creating a pool because of this, but also because you might, if you accidentally put too many zeros, for example, in the price, you'll basically sell your Solana or your token for the wrong price, and it can be quite costly. So let's see what other questions we got. Okay, I'm also curious, how do you look at numbers to select the best pools? So really, the easiest rule of thumb is just follow where the most TVL is and where the best 24-hour fee percentage is. That's the easiest way to do it. After that, then you can start looking into which generally, like the pools with the lower fee will undercut all the other pools. So lower fee percentage will get more trades routed through it, but because the fee percentage is low, you better have enough trades, otherwise you're not making very much of those trades. So sometimes it's like a gradient. Sometimes it's better to go with high fee pools than low fee pools. But as a rule of thumb, when there's a new coin and it's low market cap, you want to go the highest fee, like 5%, and probably quite a high bin step, like 200, so you can handle big swings. And then as it grows and gets more popular and more TVL arrives, you might have to reduce the fee percentage, like move to another DLMM that has a lower fee to stay competitive. And eventually it becomes like a race to the bottom. That's why like a bonk DLMM is very hard to earn with, because people keep undercutting. Okay, we got a lot of questions. Yeah. So once again, everything is being recorded. You'll be able to rewatch, and all the details on how to get the roll and whatnot will be in the video that you rewatch. Okay, this is a good question. Why are the dynamic fees higher than the protocol fees? What's the difference? So the protocol fee is the amount that Meteora are charging you, taking out of your profit for using their platform. The dynamic fee, I like to think of it like surge pricing. So you have a set fee, like say it's 2%, but the DLMM is 100 bin steps 2%. then you might see the dynamic fee is like 2.5%. That means the demand is so high that not only are you earning the base 2%, but an extra 0.5 on top of it. This is when things get exciting, because if the dynamic fee is like up to 7 or even 10%, 10% is the maximum, then that thing is really pumping and you're going to be making a lot of fees. So yeah, the protocol fee is not, it's actually coming out of your profit, but it's usually a very small amount. You can kind of hardly notice it. So Cook was going to show creating a more volatile. Maybe I can share my screen and do one in his stead. Okay, you see this?
We see it.
You see it? All right. So he was going to do something in a more volatile pool. Oh, there he is. He's back.
All right. Yeah, it's great time for my internet to just die. All right,
No
Chief.
worries. We just answered some questions.
Yeah, I see you're already. Are you trying to? Are we doing a demo for them to actually participate with here on AIOS?
Can do, yeah. I literally just set it up. But yeah, we can kind of go through everything you talked about.
Yeah, go ahead.
You can see. So the price is moving a lot. So that's why we get this warning right now that's saying it's different from what Jupiter says it is. So you need to be careful about arbitrage trades, which means if you deposit your liquidity at the wrong, at a price quite far from the current price, there are bots that will automatically snatch it, and it can be quite costly. But see, it automatically syncs after a while, and I've done nothing just now, and it has gone back.
Can you zoom in a little bit, Chief?
Oh yeah. There we go. Is that better? More?
Maybe a hair more. You guys tell us in the chat if it's looking good. Okay, go for it.
All right.
And we've got 12 minutes.
Okay, cool. So what we're going to do is we can see that the 24-hour TVL, it's basically if you deposited your liquidity in range and it can continue to be there for 24 hours, you earn probably 43%. So what I like to do is take a look at the deck screener. Share this tab. So we can have a look at where roughly we want to place our liquidity. So I will go into much more depth tomorrow.
Yeah.
On this. So I'm just going to do it quickly while we've got. Okay, this is a pretty crazy pump. So we know that's gone up recently. Actually, this is probably what most people see. So I'm going to make sure I'm on Sol. And now we can see, okay, it's gone up. What comes up must go down. So let's plan for a downward movement. And I'm just going to check the price range. Okay, it's like 25% to the bottom here. So let's just do that. I'm going to do just Solana. I'm not going to buy any of the token. I had autofill turned off. So that automatically just puts only Sol in. Sorry, hold on, show this tab. So I'm not going to buy any AOS. I'm going to just put in Sol. And on my deck screener, I figured out that I wanted to go down 25%. So I'm just going to type in 25% here. And then we talked about doing stacked strategy. So actually I'm going to do 0.05, 25%. I'm going to add that. Bin slippage tolerance, really? It's on 15%. Try again. Okay, it's completed. It takes a moment to load.
This is why I was showing a less crazy token for today, but here we are.
Just going to refresh the page sometimes. There you go. It's in here. 193, 174. Okay, so we put in spot and we put in 0.05. So I'm going to put 0.05 again, but this time I'm going to do bid ask. So instead of a regular bid ask, we're doing a layered one. We've got one layer of spot and one layer of bid ask. I'm just going to put it on top of each other. This kind of gets the best of both worlds. And there we go. You can see it's been added in, and now we have kind of a thick bid ask. So now we just have to hope that the price will go down. Doesn't look like it's pumped up, so that's a bit annoying. But anyway, that's kind of have a look at one of these more volatile pools. Things move quickly, so you have to move quick too. Okay, Cook, do you want to take over?
Yeah.
While you set that up and answer.
Okay.
While doing single-sided sol, when meme coin dumps, which strategy is safer, spot or bid ask? Definitely bid ask, as basically more of your liquidity is the lowest, placed at the lower end of the range. So if it does go even further than that, then at least you haven't lost so much value. But if you do spot, everything at the top end of your range is almost immediately reduced in value.
Okay. We're going to get more into that stuff tomorrow. So here we're going to, because we've got only a few minutes left, we got to get some stuff covered. So SolScan, this is one of the important tools out there that you can use. And you may want to use this for whenever you're doing your graduation tasks. But so enter your wallet, and then use the handy DeFi activities tab. Here you're going to find all of your activities where you say you've added liquidity, done a swap, or remove. It's marked for you. That's a beautiful thing. And then, of course, here's where you click to copy that signature or the transaction. That whenever you're going to use the P&L checker, you're going to want that, right? So that's where you find that stuff. All right. So here's the form for Bootcamp trainee. Scan this code and fill out the form. It's very simple. Please just read it and pay attention to what you're entering there. Sometimes people get that wrong, and then they don't get their role. And we don't want that to happen to you. This form is open from 1 week after the end of tomorrow's session. The forms will close at 4 p.m. UTC. So whatever that is for you, that's when it closes on January 19th. Please be patient. I'm not going to give any rolls out until after the forms close on 4 p.m. UTC on January 19th. So please don't come to the channel and ask me, where's my roll? If you come to the channel and ask me, where's my roll, before those forms close, I'm going to know that you were not paying attention. And people are asked here, what's the difference between an LP Army private and someone who is LP Army? LP Army private is someone who graduated boot camp. LP Army, it's an honor that mods give to people who give outstanding contributions to Meteora. And for context here, we currently have just over 5,200 LP Army privates, people who have graduated boot camp, and there's about 200 people who have earned the role of LP Army. There's not a form to fill out. There's not a specific criteria. For example, Alex, he created MetLex. He did all that's massive. He was given LP Army for that. There's other people, maybe they created guides. DeFi Lodges, he created a great DLMM guide. He got that. People who are active in the channel and there for a long time, that's how you get that role. So
can I just interrupt you,
please?
The form is locked. You need to give everyone request access.
I'm not sure why it's that way, but let me fix it. I apologize for that.
The panic in the chat.
Oh yeah, see, I didn't even see that.
You guys you're gonna get the form. Don't worry.
Yeah, we'll leave it up here for a second. I don't know why it's that way. It's published. Manage. Anyone with the link. There we go. Fixed. Sorry about that, guys. It should be working now. Y'all confirm that for me. All right, someone says it works. Sorry about that. Heavy Metal Cook is not perfect all the time, just some of the time. Okay. Not going to put the link in the chat. It's too long. It's not going to copy. But here's the thing, guys, don't panic. If you need to figure out how to scan this code, you can rewatch this video. It's recorded on StreamYard, YouTube, X. Come back to it, scan it. You'll be good. Figure that out. There is a way to scan QR codes with a PC. Google that. We won't have time to get into that. Only got like 3 minutes left. So there's a way to do it. Figure it out. Gonna move on. Okay. So the points proposal, really quick. All pools earn points. Vaults and farms don't. 1 point per $1 of TVL per day. So that's every 24 hours. They do a snapshot at random times. So whatever liquidity you have deposited, they're going to do that. Yes, even liquidity that is not in range does count. So if you go out of range, don't worry, you'll still get your points for that. For every $1 of fees that you earn per day, you're getting 1,000 points. There is no official points checker. We have some community tools such as MetLex and GeekLad's tool and some other things that will estimate your points, but they can only account for the DLMM, and they may not. I don't think they calculate the TVL. It's mostly about the fees. There's nothing for dynamic pools, but it's all being calculated on the back end. Again, it's estimates. Okay. Roles really quick. We have our team, the mods, the instructors, your LP Army, your LP Army privates, and trainees. These are just a handful of the roles, but this is kind of the hierarchy in the Discord. Your mods are volunteers, and we do the very best that we can. Some of us answer tickets, but we're around. We're here to be helpful for you. Please be careful. We generally don't DM people, verify anything before you, because scammers like to go off Discord, create an account that looks like ours, and try and scam you. Those people, they cannot be on our Discord with the LP Army mod name. The auto mod will smack you if you don't actually have that in your name. So anyway, moving on. These are some of the channels that you'll find in the Discord. I would like to point out the Dead community, the Dead LP Army. While they have their own Discord, if you want to learn more about the Dead community, it's like a little community that they go in, the DLMM together and do things like that. Go check them out. There's a lot of channels, and again, I hate to rush it like this, but we're like out of time, so gonna move on here. Check out the channels. We have a live chat, and after this, I'm gonna join into the voice chat in the Discord, the LP chat, to answer some of your questions. So we're gonna talk about that here in a bit. We are out of time for questions, so don't panic, guys. Join us in the LP chat. We'll answer more questions there, but we do have to end this with this. This is the end of the day one. Here is those bootcamp resources again. Take a minute to scan that code. Again, additional resources, and I will put this in the bootcamp channel. Again, just more resources for you guys. We hope to see you tomorrow. Chief is going to be your instructor tomorrow, and everybody loves Chief. He is one of the most amazing guys that you're going to hear talk. So appreciate everybody. Thank you, instructors who came and showed up today. Help us rock this. Thank you so much for everything that you guys do. And we will see you guys. Let's rock.
Explorer, fire in his eyes. Under the ice, he flies the prize. Long forgotten in the pools was more than gold or jewels. A hidden power deep within. His journey is about to begin. To shatter the token he must, and form an army from the dust. Now called the great janitor, he has become only the handler. Releasing the power inside, the dead army now arise. For this we are bred, to be the army of the dead. Forever it shall be said, I am dead, I am dead. We now spread, wearing the token of the dead. To Jupiter and beyond, the dead token is our bond. Forge ahead in the great pools, using the dead as our tools. For this we are bred, to be the army of the dead. Forever it shall be said, I am dead, I am dead, I am dead. Create new images of power that echo till the final hour. We are the dead here and now, forever dead, this we avow. From the pieces the janitor shatters, the dead army is all that matters. For this we are bred, to be the army of the dead. Forever it shall be said, I am dead, I am dead, I am dead, I am dead. this we are burning.